afternoon. I'm Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Today is Tuesday, January 17th. We've got three different markets for you today. We're going to touch on corn, a new one, soybean meal, and wrap things up with live cattle before we get into the charts and some of the things that we're looking at in those markets. Do want to remind you, if you have not subscribed or got signed up for a free trial of our daily commodity commentary, head over to Blue Line Futures Research, scroll down for a free trial. There you can select from a number of different reports that you might enjoy reading. I cover grain and livestock, so I might be a little bit biased in thinking that those are superior to the other reports, but my colleagues do cover other markets such as the S&P, gold, crude oil, the bonds, forex and currency, etc. So we've got a plethora of information there. Kind of pick and choose what you want. It's a la carte. So again, head over to bluelinefutures.com, select the reports you want to see. Get those emailed to you each and every day. While you're at it, surfing the web, be sure to follow us and subscribe to our YouTube channel. That's at bluelinefutures.com. We put out a number of videos each and every day. So again, subscribe there. Make sure you get that up-to-date information each and every day. So without further ado, I suppose we can get into the charts. The first chart we've got pulled up here is March corn, which had a great day. We also had December corn closing back above the psychologically significant $6 handle for the first time since January 3rd. So a lot of good things going on, especially considering how we opened the Sunday night trade, right? We opened up quite a bit lower across the board. Corn, soybeans, wheat all saw significant headwinds on the back of maybe a little bit better than expected weather in South America. Argentina got some rains. You're seeing some dryness in the Brazilian forecast, which should allow for harvest to pick up. So you saw pressure out of the gate last night. But then once we got through this morning's trade and into that 8:30 open, you saw buyers take advantage of that dip and use that as a buying opportunity. And now we've got the March corn contract on the verge of an all-out breakout above these recent highs, 685. If we can get out above 685 with some conviction, there's really not a whole lot of resistance until you get to these highs, which comes in near that psychologically significant $7 handle, all the way up to those highs at 7.11 and 3/4. So this is going to be a big level to watch in the overnight session and again through tomorrow. Again, if the bulls can achieve some follow through, get a close out above here, there's not a lot of resistance until $7. So that's what we're looking at here. Now, the soybean meal chart, this has been one that's garnered a lot of attention as of late. We saw the big move higher, and we've been grinding higher for the last couple of weeks as well. The RSI right now at 64.35, which is not what we would consider to be in overbought territory. Typically, the line in the sand for sold and overbought is 30 on the downside and 70 on the upside. So we're not quite there at the moment, but certainly at the upper end of the range. And I think the bigger caution flag for me is not necessarily the chart. The chart looks really constructive, but the thing that raises a caution flag for me is the commitment of traders report. So we've got the commitment of traders pulled up here. This is from the CME website, and we've got net long position for managed money or funds pulled up here. You can see that funds are record net long. So although there may be bullish fundamental catalysts, who are going to be the buyers if everyone is already bought and everyone's already long? A lot of that bullish information may be already baked into the cake, and as soon as you start to see bearish fundamentals work into play, you might start to see some long liquidation, which I think poses a bigger risk than anything at the moment. So again, of course, the funds have the potential to add to their position, and the fundamentals could remain strong to keep us elevated, but I think the risk reward up here is probably to the downside. We've been looking at using options as a way to play that for some clients who want to play a counter trend move here, and options are a great way because you can limit risk and try to maximize potential if we do roll out of bed. Because if we do break and close below this 445, 450 area, there's a lot of air underneath there with the moving averages coming in near 440. That's the 50-day moving average, 100-day moving average at 420, and the 200 at 410. So that's what we're looking at for the soybean meal. Last and certainly not least is live cattle, and I bring this up because it's something that we wrote about in this morning's daily commentary. As with meal, is the commitment to traders report. We've got a 3-year chart pulled up here. We are at the top end of the range for the managed money or the funds position here. Don't typically see them get overly aggressive above 100,000 contracts. We have seen it a handful of times over the last 2 decades, but I think I could count on one hand how many times that it's been. I think it was 130 to about 150,000 contracts, right in that neighborhood. So again, as with the meal, potentially the funds can add a little bit more here, but what's going to be that catalyst, right? And the cash market has started to stabilize, and there's growing concerns over global growth. So I think that would be a little bit of a headwind. And if we do get that fundamental shift, you are at risk again of a long liquidation occurrence from the funds. Now, it's not the same as soybean meal, where there's not a significant amount of air underneath the market on these breakdowns. I think these major moving averages and trend line support would hold. So really, we're only looking for another $1 or $2 pullback from these levels. At that point, I think you'd have to look at this as a buying opportunity again, so long as the cash market holds together and the outside markets hold together as well. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.